Hello, everybody. I'm Mike Castle, Senior Commodities Economist at StoneX, joined by the man, the myth, the legend himself, Arlan Suderman. Obviously, got our August WASDE here this week. Plenty to touch on, but honestly, I think a lot of it kind of goes back to what we've kind of been talking about in the lead up. Obviously, a lot of the headlines that you've seen have kind of been on, with the August WASDE being our first look at USDA state by state yields. That's kind of where a lot of the attention goes. But I think this, report itself was another really good reminder that 26-27, I would say, is, at least domestically, less so a supply story and really a lot more of a demand story.
Yeah, I thought that was the market's focus coming out of that report. Certainly some stories on the supply side, but the demand side is what's, I think, going to be evolving going forward. Several reasons for that. First of all, growth in demand globally, and then logistics issues that we're seeing. We have two wars going on right now, one in the Middle East and one in the Black Sea. Both of them have basically turned into wars on commodity logistics. So the one in the Middle East affects energy, in other words, fuel prices, diesel prices, as well as fertilizer, which we can talk about later. And the one in the Black Sea region affects their ability to export. Both are very commodity-rich export regions. For the Black Sea, it's energy and food-based commodities, and now fertilizer being pulled into the whole discussion as well from that region. All of that increasing prospects going forward for demand in the United States at a time we have a strong biofuel program, and we have agreements with China to buy more commodities as well, in addition to the trade agreements that we've reached over the last year that are also increasing export demand.
Oh, yeah. And I think that's kind of where the big, potential to tighten up the balance sheets really come in. And that August WASDE, obviously, the big drop in U.S. corn ending stocks was really a function of USDA raising the export side, 75 million bushels each for old crop and new crop. And honestly, they probably have more room to go up on the old crop side of things. But the biofuel demand story, and that's really a big story for both corn and soybeans. And, on the corn side of things, obviously Brazil keeping a lot more corn at home domestically with the expansion of their ethanol industry, and especially corn-based ethanol in particular. And USDA, again, this is kind of something I didn't see enough people focusing on, was raised Brazil's domestic demand expectations for 26-27 by 2 million tons, which is, just a little over, it's about 78.7 million bushels. And at the same time, they also raised U.S. corn exports for next year by effectively that exact same amount, which, again, I think is just that reflection of Brazil kind of keeping more corn at home and other exporters, namely the U.S., kind of having to fill that gap. And then the soybean side, again, you got the increased biofuel mandate showing up on the crush side of the balance sheet. USDA moving soybean crush for 26-27 up another 50 million bushels to 2.8 billion. Do you think more of that could be to come? And, obviously they didn't really touch the export side on soybeans, but do you think they'll end up having to move those targets as well?
Yeah, the crush went up to about 2.775 billion. I'm at 2.8 billion. I think that's where they'll end up getting to, as long as we don't have any significant maintenance issues in the crush industry. And when you look at what we have current capacity and new capacity coming online, as I talk to our oilseed team, I say, if China actually does take the 25 million metric tons that they've committed to of U.S. soybeans, we're going to have to ration demand. What's your view on the ability to ration that domestic demand going for the biofuel program? They said that's going to be awfully difficult, and I would agree with that. I just wanted to get their view as well, since they're working closely with that industry. We look at our crush margins for soybeans. They've just been tremendous crush margins. So there's every incentive to fight for every bushel possible, and the RVO requirements are going to really push that agenda. Because we can't produce enough fuel, we're going to have to import fuel and import feedstock both in order to meet that RVO. And so domestic crush is going to be very hard to slow down and ration with higher prices. So if China is going to buy 25 million metric tons, that's still a big if. It would be a political purchase, not an economic purchase. But our contacts in China keep saying they're absolutely convinced China's going to do it. We'll see. But the reason they're convinced is paying a few million more for U.S. soybeans, which are higher price, is a small price to pay for billions in benefits they can get in other parts of the negotiations. So if that's going to happen, the market's going to have to ration demand, which we're not short of soybeans unless El Nino cuts Brazil's crop short in their upcoming growing season. If they don't, we're not short on soybeans. It's a matter of the market needing to reshuffle those supplies, which means raise U.S. prices relative to Brazil prices so that non-China customers have to go to Brazil. And you did a graphic on that, a little study on that, how much soybean business would have to shift south. The market would have to do that. Several hundred, I think around 340 million bushels worth of demand would have to do that. Probably end up importing some into Southeast as well. The record imports over the years has been 72 million bushels into the Southeast, where they're geared up for offloading soybeans. But mostly the market's going to have to reshuffle. When you look at the ethanol side, U.S. has trouble getting over 10% mandate on ethanol. Brazil's at 32%, considering 35%. Much of the rest of the world is increasing its ethanol blending in addition to its biomass diesel blending. And so that's increasing export demand for corn as well, even though we're not increasing it for ethanol production here in the United States.
Oh yeah, that's that could be its own rabbit hole, I think. But I do think that that's a really good point, and that's a really, I guess, continuation of kind of what we've seen in the last few years is just a lot of disruption to traditional trade flows, and then the market, and particularly the cash markets, having to kind of shuffle that deck to end up lining things, where they need to kind of go. And maybe that could kind of be the segue into, what's going on in the Black Sea, as we continue to see these escalations between Russia and Ukraine. And again, I mentioned the Black Sea, but now it sounds like maybe some rumors this morning that could be shifting elsewhere as well. I guess what all have you heard so far on that front?
Well, we first heard chatter in the market overnight that Ukraine had struck one of Russia's ports on the Baltic, which would be highly significant because they do a lot of exporting through the Baltic. And that's another avenue with, after Ukraine has now shut down Russia's ability to export through the Sea of Azov, and much of their export capacity at the Black Sea is now shut down. So they were railing wheat to the Baltic. And now Ukraine has shown that they can hit those ports as well. Now, Reuters is reporting that no grain facilities were hit, but that they hit an energy facility there. They still got the capacity to hit the grain, and I wouldn't be surprised if that happens here in the days ahead. Maybe over the weekend, we'll see, and markets putting in some risk premium on that possibility. But talk to us a little bit about the impact of hitting the energy facility there. What impact that'll have.
Yeah, so this really, obviously as things in the Middle East have kind of, I don't want to say come out of focus, but you haven't seen as much concern, like obviously global urea prices have corrected. But if you do actually start seeing more of this shift to the Baltic, I do think that fertilizer conversation kind of comes back to center stage, because Russia does export some fertilizer through the Black Sea, but traditionally most of that is now going through the Baltic. And that's another prime example of things having to kind of get reshuffled. They used to ship a lot more through the Black Sea. That's not really the case anymore. They've kind of had to transition to ammonia through the Baltic because they lost their spot in Ukraine, which is normally where they would export from. And that makes that a lot more important, especially exactly where we're talking, which is Ust-Luga. So it's not just, one product either. They're ammonia, urea, and phosphate, which really I continue to harp on that. I think phosphate's going to kind of be the bigger story here for the remainder of 2026, especially as we start to talk about fall application season. The ammonia and sulfur side are really the big limiting factors there. And a lot of producers are reliant on importing those to produce their own phosphate. And if they can't do that, they have to import the phosphate from somewhere else. And there's just not that many players in the world. So that really restricts it. And that kind of pushes everyone either to Morocco or Russia. But they've only got so much to go around. And to this point, obviously, Russian stuff hadn't been super impacted. But if you see particularly the nat gas side of things get impacted, that ultimately has that downstream, damage to their ability to produce phosphate, or if you saw, again, logistics being targeted up there, that could be another conversation. And that would effectively just be exacerbating a problem that we're already expecting to see.
Yeah. And so that's a longer term picture to watch for 2027. The shipping period really picks up the pace normally here over the next several months, right?
Yes. Yeah.
And so that makes fertilizer a growing issue over the next several months. We're not saying yet there is definitely going to be a shortage of fertilizer in 2027 crops, but things are starting to fall in place to increase that risk. And so that'd be a concern. Now, the market will ration that demand. It'll pull back the demand. So what impact will that have on yields will be the question. Phosphate, many places will be able to get by a year or so, or a year or two, without applying the normal phosphate if their soils are good. Nitrogen becomes a bigger issue. Now, a lot of places apply a little more nitrogen than what they need, maybe pulling back 5 to 10% doesn't impact yield. You start pulling back beyond that, you start seeing the yield effects. It'll vary by location. Some of those places that are least able to afford the higher prices of fertilizer will be the ones that will see the heavier rationing and the more impact on yield and production if, in fact, that shortage does develop. So again, we're building these demand dynamics. The U.S. is likely to have the supplies it needs, right?
Mm-hmm.
So it comes down to what will the costs be. So the U.S. producer is going to have to really be looking at margins, talking to their suppliers, being willing to commit when they can forward price or price grain at a certain price and make it work if they buy inputs at a certain price, be it diesel and fertilizer, and make that work. Suppliers are more willing to work with you to do that if you're willing to commit and lock in those variables. Grain price opportunities look to be highly variable, maybe some opportunities. End users need to be worried about upside risk. Producers are starting to smile a little bit more about that, but input costs could be a real challenge. These cash markets, in order to going to be a lot of differences in basis and everything. And so a lot of volatility in the year ahead, but I think with some opportunities and some risk going forward.
Yeah, absolutely. So I think that's, certainly shapes up 26, 27 to be a very interesting year, to say the least. There's going to be plenty to talk about, plenty to keep an eye on. Going to have to continue clicking that refresh button to make sure that we're, staying up to date. Obviously, we're going to have a lot more to talk about moving forward. So I think we'll kind of do some more of these to kind of maintain those regular updates. Yeah. But Arlan, thank you for your time. Thank you to everybody, and have a good weekend.